6 charts to help you understand national government revenues. As demands for government programs and projects grow, the need for government revenues also increases. For the past 20 years, government revenues have been increasing except in 2009 when 19 revenue-eroding measures were passed by Congress and the executive, and in 2020 when the economy went into a record recession due to COVID-19. Almost 90% of revenues come from tax collection and the remaining 10% from non-tax revenues. The share of grants is almost negligible. The two major tax-collecting agencies of government are the Bureau of Internal Revenue and the Bureau of Customs. BIR collects more than 75% of all tax revenues, while the BOC collects almost 25%. Other agencies like Bureau of Fire Protection, Bureau of Immigration, and the Land Transportation Office also collect particular taxes like the Fire Code Tax, Immigration Tax, and the Motor Vehicle Tax. But the collection of these other agencies only compose 1% of total tax revenues. Historically, 50 to 60% of BIR tax collections come from income taxes. But with the proposed CREATE bill that reduces corporate income taxes, in 2021, the share of income taxes will go down to almost 40%. And for the first time in 20 years, will be overtaken by consumption taxes on domestic goods and services like VAT and excise. The other taxes that comprises the balance of less than 10% consists of documentary stamp taxes and other miscellaneous taxes. Taxes on property is the lowest because the BIR only collects transfer taxes on transfers of property. Real property taxes are devolved taxes and are collected by local government units. 85% of the collections of the BOC comes from VAT and excise of imports. Less than 15% come from duties or tariffs. As the country enters into more free trade agreements and tariffs are further reduced, the share of tariffs further goes down. Based on commodities as of 2018, fuels, oils, and chemicals are the highest source of collections. In second place are motor vehicles. Foodstuffs come third, and iron and steel take fourth place. Non-tax revenues comes from the income of the Bureau of Treasury, fees and charges, privatization proceeds, and other income of agencies. BTR income consists of dividends from government-owned and controlled corporations and interest income from investments. This is often the highest non-tax revenue source except for the years when there are high gains from privatization. A common measure of tax collection is the tax effort. Tax effort is the ratio of total tax collection over the gross domestic product, or GDP. The ratio tells us how much of the country's total output is collected in taxes. A high tax effort means that more of the country's economic output is collected in taxes, while a low tax effort means less of the country's economic output is collected in taxes. Those who believe that government should spend on more services to society would aim for a higher tax effort, while those who push for smaller governments would not be worried with a lower tax effort. Tax effort can be improved either by improving tax administration, meaning closing loopholes, penalizing tax evaders, and enhancing enforcement, or by increasing tax rate. From 2000 to 2010, Philippine tax effort deteriorated despite the increase in VAT rates due to poor tax administration and several revenue-eroding measures. From 2010 onwards, tax effort has been improving, mostly due to improved enforcement of tax laws during the term of President Aquino and several components of the comprehensive tax reform program pursued during the term of President Duterte.